What's up? What's up, everybody? How you doing? I'm Big Cheds. Thanks for hanging out with me. It is Saturday, 2/15/2025. Warm hello and thank you for spending a little time with me on a Saturday. This is part of the quick market update series on my YouTube, Cheds Trading. I teach professional technical analysis, Japanese candlestick theory, and classical charting. I try to take the complicated, the academic, the professional TA, and I try to make it a little bit more simple and easier to digest and understand. I've published 3 books, and my 4th book is coming out pretty soon, next couple months maybe, the Trading Journal. And because of that, I'm making my my 3rd book completely free. There's already a free version for the Cancer Memoir and Trading Wisdom, which is super popular. And now I just started a brand new playlist for trading quotes. And so I have weeks 1 and 2 out already. Check that out. If you want to learn how to trade, you got to start with the Masterclass tutorial playlist. You probably know me from Twitter, where I'm at Big Cheds. And I'm also, of course, Bitcoin Live, which is the best team in the world that studies crypto. I do a twice a week full market report on Bitcoin Live. Really would encourage you to check that out. But while we're here, I really like to do as much free content as possible. Like when I started out, people helped me out for free. And so that's really what I try to do. And so that's what we're all about. Questions, comments, just let me know, say something in the chat. I'd love to hear like a good trading question from you. Oh, Cheds, I've been struggling with this. Cheds, I've been having trouble with this situation. How would you deal with this? How would you deal with that? And, we can take that and make something good. We can make some good educational content. But I'm going to start out real quick. I'm going to do Bitcoin, Ethereum, Solana, and then kind of bounce around. I have some tweets I want to talk about. I want to give a good lesson on divergence today. And we'll go from there. So, of course, Bitcoin, just ranging. It's super bullish on the weekly time frame and the daily time frame. You've got, range lows well marked. You've got range peak overhead reasonably well marked. And the daily channel is chopping around. I did put out a tweet for a 4H look, and I was showing people the price was attempting to rally and continue with the trend, but you can see it just kind of got thrown back, and that's what I had outlined here with the 2-level filter, descending supply trend break, and then it bounced, essentially was thrown back into the channel. And it just kind of makes sense because I've been saying avoid the chop in the middle of the channel, and you're not really getting much to work with here because it's consolidating. Look, all the moving averages are sideways, the 834 to 20, MA50. This is a range you want to avoid trading. You want to wait for interaction with key level, not just on this chart, but really any kind of chart that looks like this. You want to wait for a break of the upper range or a retest of the lower range. You mess around here in the middle, you're going to put the market makers' kids through college, right? So I always say that. I think it's fun. Ethereum is weak to Bitcoin. I'd much rather be in Bitcoin. I do not see any bottom in Ethereum versus Bitcoin yet. Nowhere close to it. Would want to see Ethereum hold 2,700. It's struggling. It's having trouble doing that. It's unclear to me that it's really going to do anything other than slowly dribble down at this point. And Solana, I like Solana. It looks really good. You're definitely bullish above 185. So all in all, on those 3, not a lot has changed, but I just want to do a quick update on that. Of course, we can do your requests today. I can try to do some of your requests, but I really like the questions, the trading questions, I think are the most interesting and help create the most value. But first, I'll go ahead and check in with the chat room. What's up? Indy, Martwan, Ryan, Yaseb, Digital Trip, M. Gross, and everybody else. Thanks for hanging out here. Drop me a comment. Give me like a good question for trading, folks. And that way, the people who are listening silently, we want to create some value for them. So go ahead and please do that. So here's a good question. Can I explain why hidden divergence works better than normal? It's a great question. So RSI works better with hidden divergence than for regular divergence, right? So for example, you take the OB. So what is hidden divergence? So hidden divergence, and you actually have a little bit of it, kind of a mild here on Bitcoin. I think we see it a little bit better on the 3-day chart. So we'll clean this up. And hidden divergence is going to be where you have a lower low in the RSI here, kind of a flat to slightly lower lows. And again, remember, we're calculating based on the candle body close, and you have a higher low in the price. This is a bullish hidden divergence with RSI. You have a lower low, higher low in price. This shows that the bulls are retaining price gains while the RSI cools off. right? The RSI you could go hidden divergence all the way down to quote unquote oversold, and you could have the price up here and be a perfect setup for a new leg higher, right? So RSI is a bounded oscillator. What that means is a fixed limit, upper and lower, and it's calculating based on the last 14 bars and the average price gain versus the average price loss. And so what a lot of people make a lot of mistakes with divergence, and I've tweeted about this many, many times. For example, quick reminder, divergence is drawn from the candle body, not the wick. And I see some really good traders making this mistake. You can't use a wick because this calculates when the candle closes. That's what your value is. So number one, if you see someone using wicks, let them know they're doing it wrong. And then you should probably be skeptical with the rest of their analysis. Number one. Number two, you don't want to use RSI for regular divergence, which would be a lower high, because it's bounded. It only has a fixed limit, right? You're going to use that with OBV, like an index like OBV works much better for regular divergence, okay? You don't want to use the OBV for hidden divergence. There's no scenario where it's better to have a lower low in the OBV while the price rises. That means that price rise is not backed by volume on those green candles. That would be bad, okay? It's good to have lower lows in RSI. It means you have room to run. So it's cooled off while the price has retained its gains. You should be using RSI for hidden divergence and not regular divergence. So I had an interesting exchange here where somebody put out a chart, and they're like, oh, anyone want to tell me what this means? And I'm like, what are you doing? First of all, are you really trying to draw divergence with RSI using wicks? First of all, they're using wicks, which is just weird to me because it's like just the wick. And multi-month period, 14 bars. It doesn't make sense. This wasn't even a multi-month. It was actually a couple weeks. But you don't want to use it for... this is a very 2-hour chart. So even on like a 2-hour chart, you really would only draw it based on 14 bars, number one. But number two, like RSI is going to set up lower lows, but that doesn't matter as long as the price retains gains. You want to use it for hidden or continuation divergence. For example, if you have higher highs in the RSI, right, and lower highs in the price, that's a hidden divergence as well. So I get some pushback here. Cheds doesn't know what he's doing. Cheds doesn't know how to use RSI. You're a fool. And then of course, big Cheds for the win, because what happened? Fresh highs as expected, right? Somebody's like, oh, this is the kind of thing where you try to draw. New traders misuse RSI all the time. I'm not saying this guy's a new trader. I actually don't know who this is. But new traders make a mistake all the time where they convince themselves the price is going to top off because they're drawing a regular divergence with RSI. You don't want to do that. I mean, OM has been one of the most beautiful bullish charts. I've talked about it a lot. And yet somehow I've removed it from my list, which is kind of weird. I did that by accident, of course. Here we go. So OM has been one of the most bullish charts for quite a while, and you don't want to bet against the trend. Very beautiful, clean consolidation. You might have, new trader might have sold here because the price became quote unquote overbought. But what happens is you get the biggest price moves after it becomes overbought. Right? The only way to become overbought is bullish. To be bullish, and trends will tend to continue. So using RSI the wrong way will get you in a lot of trouble where you're anticipating a reversal for no reason when the price hasn't lost support. Nice, beautiful throwback, grinding higher. I mean, this is a beautiful, beautiful chart. OBV confirming the trend. RSI is fine. It's strong. It can just stay in this range for a long time while the price rises. So you really, really do not want to use RSI for regular divergence, and you do not want to be drawing with the wicks. That's just not how it works. You want to draw it based on the candle body close. I did tweet out a link to an Investopedia article, which kind of goes over how oscillators work. RSI is a momentum oscillator and how it calculates. So you definitely want to check that out. This is just another general Cheds tweet, trading psychology tweet. If you're trading a lot and you're just sitting at the computer, your blood's not flowing. You're not really doing. You got to kind of take care of your body. So. You got to spend a little more time on. I wonder if this guy was an AI response. It's a very weird. You got to take care of your body, right? Just go do 5 push-ups, 10 push-ups. Blood will start flowing, and you'll be making better decisions. So you have to feed your brain. You have to feed your brain properly. This is just BNX, beautiful, observing this volume cluster. indicating of volume. Let's check in and see how BNX is doing. Let's take a little peek at BNX and see how it's doing. It's still consolidating, but this is very much should be on the radar now, given this break, big time accumulation, some nice follow through so far. And this is a very nice high and tight, kind of almost looks like an ascending triangle building here, lower time frame. This is a nice looking chart, a very nice looking chart. So let's check in with the chat room. I went over pretty quickly, but I went over the topics I already wanted to discuss. And now we can try to answer your questions. So let's see what's going on here, folks. So let's see. Thank you for Cheds, your updates, your scholar, and a gentleman. Log and linear, what's the difference? A logarithmic is a percentage gain. Axel Kabar has and I've tweeted this out before. Axel Kabar has a really good log versus linear. He's colleague here at Bitcoin Live. He's got a very good explainer article on this. If you want to look it up, and I've tweeted it out a few times, but essentially, logarithmic is going to give you the percentage gain. And I think with volatile markets, you're better off using logarithmic. Let's see. Cheds, did you take the OM trade? I didn't take a most recent trade on OM, but I'm long from the 440 break, right? I'm just riding that position nicely. For me to do anything else, to initiate a new position, be at minimum like a throwback to the prior range high. You know how I play. I am disciplined. I like to wait for a dip in an uptrend. Matej. So let's see. This is a good question. Indie Rock says, can you explain what to expect when the candle bodies get smaller after an advance or a drop? It's a really good point. You think about momentum, and the candle body expresses Japanese candlestick theory. You can learn a lot about the candle body progression. I tweet about this a lot. You could have small body, bigger body, even large body. Maybe I'll try to find an example here somewhere that better than me just drawing it. But I'll kind of poke around here for a moment and find a really good example of what I'm trying to say. But generally speaking, you can follow the momentum where if you have a really large body, and I guess I don't want to take too long trying to find a good example of this, right? I don't want to take forever, but let's just try to draw it again. So you might have a big body like on a breakout, right? Here's a range and a breakout. And then you have a smaller body and then a smaller body. And then maybe even you get like a doji or something, right? That's showing momentum slowing down. So you can see in the progression of the candle body size, right? We've seen a lot, I think, on Bitcoin, the weekly throughout the years. I've been able to point that out. I'll just quickly look and see if I can find an example. Like a decent example of that. But even here was pretty big. So you didn't have any follow through on this big time breakdown candle, right? Back in November 2022 at the bottom. It went big body right to small body. And a lot of the times what you'll see here is like a tower bottom, right? A big, you folks call it like an inverted BART. But, and you even saw a little bit of a reversion here where there's big body and then small body. So you can kind of see even here, there's a failed bounce, but you started to see it here. You started to see it here where it's bigger body, smaller, even smaller. And it tried to bounce and it got thrown back here. You see with the inverted hammer and then it just rolled over, kind of did it again, tried to bounce and then rolled over. Here we actually had the follow through and you had the tower, right? Move down, small bodies, boom. So this is a beautiful tower bottom on Bitcoin. We all got long at 18.5, of course, but you can follow the progression of the candle body size as an indication of momentum. It often will lead to some type of a tightening range, or even, something like an inside bar. So you might have advance, smaller, and then you might get something like that, which is actually quite bullish. Price compression after an advance, right? Likely continuation. Good question, Indy. Let's see what everyone else has to say. Checking in. Somebody says, dude, what's up, dude? How you doing, Muff Chomp? So this is a good question by Terry. And by the way, folks, if I miss your question, I'm sorry. I'll try, right? But there's a lot of people saying a lot of stuff, and this is good. I want a lot of questions. So can you, when a chart loses a key support, how can you see a fake out coming? You can't really. You just have to wait for it. You hopefully get a fake out. You don't know if you can see it coming. I mean, you can intuitively be on the lookout for it. You definitely want to be on the lookout for, like a range low sweep and recapture, which is called a spring. You got one here, and that just gives you a very easy long trigger. when the price is down to here, and I'm talking about this doji, the long leg doji here on the January 25th. I mean, at that point, you're dropping down to a 4-hour lower time frame, and you're very easily able to get long on the loss and recapture. And it's not foolproof, nothing is, but it's one of the easier techniques. It's a reasonably well-defined price level, held, lost, recaptured. You definitely want to go long, okay? And then from here, you had another long signal on the 96K break. I mean, we're chopping back into the range, but there's a beautiful move. There's plenty of profit to be had, in that move. I don't know that you can anticipate it, nor that I don't know that you can know it's coming. You have to just be ready for it if it happens. I love momentum reversals. I'm always watching for, like when Bitcoin had the upthrust and I called top in 2021, humble brag, called top in the exact day, humble brag. I got lucky, by the way, but you're on watch for it. Like when we went to break this high, the 64K high, I was on watch for the fake out breakout. We got it here, right? So you didn't know, you can't guarantee it's coming. You can't see it forming. It's really only after the fact and just being ready. And that's what trading is about. It's not necessarily anticipating what's going to happen. Yeah, you can have a good idea based on momentum and based on price behavior and structure and, all that good stuff. But it's more so just taking the new information and being ready to process and knowing what to do when new information comes in. And that boils down to muscle memory, right? Sir, can you give your thoughts on LTC and why you're underexposed to digital silver? It's just not that good a chart. I mean, it's slowly getting better, and it's over 100, which is good. But every time it's tried to break out here, it's been rejected. Here's the daily chart. Let's look at the weekly chart. This is not a great trend in the weekly. It's basically just sideways. I don't like Litecoin because they're just way better charts. I feel like we've been talking about it in this price range for years, and we literally have. And literally since I've been doing Bitcoin Live, which is March of 2018. So it's more than 6.5 years. I've been doing reports there twice a week. Quick plug. It's been basically the same price. There's no trend here. I play trends. And there's a kind of a cult following for it, which is okay. But I think what people are doing, which is a mistake with Litecoin, is they're trying to make it and think of it as a real thing. It's not a real thing. Don't think about use case, right? It's what is the point of that? Use case. I've heard the same arguments for Litecoin literally for 6 years, and it's basically in the same price range. So there's just dozens or hundreds probably better charts. At least dozens right now than Litecoin. So that's my thoughts and why I'm quote unquote underexposed. According to you, what percentage of your trades are in profit? Probably 30%, maybe 25, 30%. Because I try a lot of stuff and I'll take a small loss no problem. I love taking a small loss. Not that I love it, but I like the control I feel because I've been disciplined. I had a plan, and I'll take a small loss, and I'm okay with it because I had a well-defined idea, and with a well-defined idea, it's like a blind date. You start out with an exit plan, and same with a well-defined idea. I'm going to go over this a lot in the Trading Journal book. I think you're going to love it. Do I follow Cliff? Hey, what's up, Cliff? Nice to see you. Do I follow BCB or any other YouTubers? No, I don't. I don't follow those people, and I really would say I don't trust anybody on Bitcoin other than myself. And I know it sounds weird, but I've done the professional TA. I did CMT. I've read the textbooks. I just see most people don't really know what they're talking about. A lot of the big accounts too. I don't want to hear what anyone else thinks about Bitcoin because it doesn't mean anything to me. I'm nose to the ground on Bitcoin. I can ear to the ground. I can just feel it. I watch it all day. There's one person who I respect who's on YouTube and Twitter who I actually would pay attention to. It's actually Chartman Dan from the Chart Guys. Plug to him. There's other people who are okay, but I really don't care what they think. I've been on the opposite side so many times of mostly the rest of the people, and I usually get it right. I get it wrong all the time. Of course, everybody can, but my methods worked out pretty good. If you followed me, you know that. And I almost tell people, don't pay attention to what other people have to say about Bitcoin. You teach yourself, grab a textbook, learn yourself, keep it simple. It's price above the MA200. It's an uptrend. It's price holding support. It's bullish. Don't over anticipate. Stop using RSI for divergence. I give you guys all the tools. I lay out the whole playbook in my Masterclass tutorial. And it's actually kind of crazy to me that there are people who trade and risk money and haven't watched my tutorial playlist. Like, that's nuts to me. Can you imagine that? Like, if there's something like that was available when I got started, I mean, it would have saved me years. It would have saved me multiple accounts that I ran to zero. So let's see. Let me scroll around the chat room. Did you see Plan B converted all his Bitcoin into ETFs? I did not. I'm blocked by Plan B because he's another one of those accounts where I've called out and being like, bro, that's wrong. You know what you're talking about. Plan B, I don't think he's a serious person, to be honest. I don't think he's a serious. I've never seen any good TA from him. So, and I'm just being honest with you folks. I'm always going to be honest. And I don't want to come out and make it seem like I'm just, shitting on people, so to speak. But Plan B is like kind of a joke. Like, if you ask like the vets, like people like me, and there's people who are more veteran than me, which is fine. If you ask them, they'll be like, yeah, Plan B is like kind of he's like a noob magnet type of person. And he doesn't know what he's talking about. So I didn't see that. I kind of don't care. I think it's fine. Whatever. Maybe he's smart with that move, and maybe not. Like, I don't have anything to reflect upon the fact that he's moving his Bitcoin into ETFs. I mean, I hope he does well. He's a human. I wish him well and all that, but I don't have respect for his style, or anything like that. Somebody says, hungover, here we are. I actually was a little bit earlier this morning, and I drank a lot of water, and I went and had a workout, and so I'm kind of pepped up now. I'm feeling pretty good with that workout. Question in detail. How do you personally make money in terms of trading when we're in a full-blown bear market? Well, when's that going to start? When does this full-blown bear market start? I mean, this is a bull market right now. And you said, love the show. Thank you, Todd. So how do you make money in a bear market? I mean, you play relative strength. You go long on good charts and you short bad charts that bounced. If you guys remember, I gave you guys a couple wonderful shorts recently. Not that it's a bear market, but I gave you guys that short on DOT at 750. I mean, you made like unbelievable profit on that. Right. If you remember my tweet on Twitter or an X where I said, this is a good spot to fade. And I gave you guys a short on Ethereum at 3,400 when everybody was like, that's it. And I'm like, I don't see it. Ain't happening. It's not there. It was this day. It was like literally this day. Let me try to grab the arrow. Let me try the third time. It was right here. And it was a bounce. How did I see it? Am I a magician? I mean, not really. It's an underperforming chart. It was a bounce into overhead. And I'm like, listen, this is a good spot to fade. And so you did, like, could have taken that to 2,100 or even from here. So you have to be tactical. You have to short bad charts and still if we ever do get a bear market like you're referring to, still play relative strength. Even I do Bitcoin Live twice a week, right? And so even in we've been in bad markets, but I still find there's still good charts. You can still follow good charts. You still get opportunities where you have well-defined price structure, drops into support, things you can work with as a technician, okay? What do we see here? Carlos has a good question. You previously mentioned Bitcoin 92K is a key support level. It's actually a price zone. I'd say right around 91K zone. Not necessarily 92, but it's a zone, again, a zone of price. Again, like with a diagonal line, it's not about the line, it's about the trend. And so it's not even about the price, it's about the filter around it. You learn this in CMT or classical charting in any textbook you read. It's a zone of price. So it's a generalized price zone. And to keep it simple, to keep it for communication purposes, and even just for marking it up, you can actually just use 90K as your delineator. So if it loses the 90 to 91K zone, I think there's like a 90% chance we go to 74K. Right. And I know some people are targeting here, which is weird to me. It doesn't make any sense based on momentum. This is an incredibly well-defined price zone in classical charting. You have all these price attempts with what's called time interval in between them. You have price distance, trough to peak in between these attempts. So it's not just attempt the next candle. It's attempt, bounce, attempt, right? It's a really important level. So if we lose that, we are not going to stop here. in the middle. The question was, how can fake outs be avoided? They can't. That's not how it works. You don't avoid fake outs. You absorb them, and you deal with it. Which is why with any good thesis, I recommend you actually try it at least twice. If you get stopped out, you can try again if the idea is revalidated. What I mean by that, for example, let's say you are watching this and this is $100 and it's resistance. You take a short. Let's say you want to go long here. Okay. I'm going long. It came back in the zone. You got stopped out. You can try again on the second time. Now your idea is not. It wouldn't really usually wouldn't go straight up, but the idea is when it's revalidated. You wouldn't try again down here. You would try again here at the same trigger level. Now, if the price continues to chop through this level, it's no longer a level because the price isn't respecting it. The price doesn't care about that level. So, for example, if Bitcoin now, and I just went through a litany of reasons why this, and by the way, I hope everybody's doing well, and thank you for hanging out. Thank you for coming. If the price starts to chop through here, it's just not as important a level anymore because the price doesn't care about it. So you need to be adaptive. You need to work with what you have, and then take the new information and put it into play. All right, good room today. Great questions. Hope everybody's chilling on a Saturday. Maybe we'll do a couple more, and then I'm going to go work on some of my projects, which my wife knows means I'm going to go play some video games. Cheds, do you ever use Heiken Ashi candles? I do not. I believe Heiken Ashi means the trend in Japanese, and it's almost like going to like a yearly chart or like a multi-month chart because it's just taking the trend. So let's see, Heiken Ashi. Right? So it's a sense of trend where, this is the top, right? Look at all these green, and then we had red. Well, really, it's just consolidating. I don't really use Heiken Ashi. I know some people do. I just don't know what you're going to really do with it. I just don't. I've never really found a good way to work it into my system. I just think the OLHC, open, low, high, and close, right? Classic Japanese candle, OHLC, is going to be is the best method, at least for me. That's the method I teach. It's the method I use, and I think you've seen it works pretty well. The combination, honestly, of candlestick theory and classical charting, there's beautiful together because candlestick theory is short term only, right? There are no long term Japanese candlestick signals. There's no such thing as like a long term signal. I just said that now twice. That's where you have to use classical charting. But you can use candlestick theory for kind of in the middle of the channel, in the middle of the range. And I've talked to Peter Brandt about this a lot. And he's wonderful. He's a wonderful colleague. And he basically complimented me and said, you're really good at kind of the smaller, the in-between stuff, which is, for me, it's candlestick theory. I'm all about it. So I think it's wonderful to kind of use those both. But there's things that you should know. Like, for example, there's some mistakes in the textbooks on candlestick theory. Like the guy Bulkowski ran the numbers. So like a hanging man is supposed to be a reversal candle, but it actually leads to bullish continuation, like 58% of the time. And like an inverted hammer is supposed to be bullish, but it's really not. It's bearish. It leads to bearish continuation, I think like 62 or 63% of the time. So you need to read the textbook, but then you also kind of need to level up from there. I would do CMT, and you definitely have to watch the Masterclass tutorials. How or what is crypto market like in 2050? That's a really good question. If I'm blessed enough to be alive, and maybe I'm still doing this, maybe I'm not. Maybe I've written another, 5 or 6 books by then. I hopefully have done some other things in my life. You don't ever really want to stay static. I know I can't. But I want to keep growing. And so by the way, I've got a journal coming out. Then I'm going to do a poker trading book after that. And then I probably will do my life wisdom book, 50 lessons everybody should know. So that'll be a fun project. Let's see what else everyone has to say. Can you check out INJ? Sure. It's just a bad chart. I mean, I've been telling people to avoid it since it lost 31. And I don't know why people are still like, what? It's just a bad chart. So, I mean, it's 15 now. I mean, you had a very easy sell signal when it failed to hold at 31. And here's a great example of an upthrust or a false breakout. So you pretty much have been avoiding it from here. Hopefully you have not been holding it all the way down. And even worse, hopefully you have not been adding, right? You do not want to add to your losers, okay? Do not scale in and keep adding as the price is going down, because you can convince yourself, well, if this next one really is the bottom, I'm in a good position. But you know what happens? Trends will tend to continue, and you're going to get smoked. Absolutely smoked. I would not be touching this chart. Right? Now, if it drops down to like $7, $8, maybe you can take a look at it. And maybe that would be a level to maybe add some risk. Say your average is somewhere in like the 20s, maybe at like $7 or $8, you can put a little bit, you can try there. But then again, you can't, I wouldn't be holding below 8 or 9. I probably would not hold anything below 8. Like if it loses 8, you would have to sell what you just added back in, because the idea would be this is a high time frame, throwback, and like it should have held here and it didn't. Right? So it's just a really bad chart, INJ. I would just, like, honestly, delete it from your watch list, and you'll be way better off. Let's see. I was blocked by Plan B too. Yeah, I mean, because a lot of people, a lot of people I think have kind of given him flack, because he's definitely led a lot of new traders into the fire, unfortunately. And I think this is more so back 2018, well, more like 2022. So I understand your approach to just to look for good chart setups. This is from Chuck Miss Prime, which is a cool name. But people like Warren Buffett, okay, they like to know the products, the markets, etc., and what's coming out to anticipate demand. I mean, that's fine for like IBM, but what we're talking about, like Litecoin and HBAR and Stellar Lumen and like Super and ENS, or like, what are these aren't things. These are vehicles for speculation, right? Like you shouldn't be treating these as companies. Like, sure, a company has, and companies have, but those are publicly reported companies where you can work off of that. I think fundamentals work okay in equities markets, but you can also just play the chart, because the market is smarter than you. The market's already worked in everything that you think you know about it. Like everything you think they have they got some order coming. They have a new factory they're opening. Like, okay, great, but if that's important, the price will break support. The price will break resistance, right? And if it's really bad, if it's terrible, the price is going to lose support. Like people calling top in Bitcoin, stop. Wait, if it starts to lose support, then I'd say, okay, let's take a look. But like, don't try to think. This is a good question, Chuck or whatever Prime. Don't think about these. These are not companies. These aren't real things. Like algo. Like, well, these are literally just letters on the screen. These are vehicles for speculation. Okay, hit it and quit it. Get in, get out. Play strength. You can't. The minute you start to believe in something, right? I have a quote. I have all these quotes, right? Because of course, from my book, and I'll go over that by the way, I'm doing the free version of my trading quotes book. This is great for trading psychology. If you're into that, start watching that. The minute you start to believe in something is when you start to let your guard down, and you almost give yourself permission to not manage your risk. You're giving yourself permission to hold after support is broken. Okay. All right. He says, "What's up? Good TA. Thank you, Ian. This has been a good. This has been a really good stream. We're coming up in 35 minutes, a little bit longer than normal, but I like these. I really want to create good educational content, but I want to empower you. I want to teach you to read the chart for yourself and not rely on someone like me." Because there's a lot of bad TA out there from big accounts who are just plain doing it wrong, okay? I studied professional technical analysis, and that's what I teach you. It can be used in any market. Start with the Masterclass tutorial playlist. I've got 3 books I've published. 4th one's coming out soon. Most of my books are mostly free here on YouTube. They're also available on Amazon and Audible. If you like audiobooks, I've recorded the audio for all of those books. So check that stuff out. This is a part of the quick market update series. I do a full market report at Bitcoin Live every single Wednesday night and Sunday night. I've been doing that for the last 6.5 years, and I haven't skipped one, which means like that's 52 a week, right? Or that's 52 times 2, so not 52 a week, but 104 a year. I'm doing every week, twice a week. We stay on top of the market, full market. All the best coins, all your requests. And when you sign up, you get access to the entire team's work. So they do their stuff too. It's a wonderful thing. Super proud of that. I'm Big Cheds on Twitter. I appreciate your follow. I appreciate your feedback, good and bad. Come at me. Let me know what I'm doing wrong. I need to keep growing. I'm going to try to keep growing. But I'm having a lot of fun with this. This is part of the 3 times a week update series in the Quick Market Updates. That means I will be back on Tuesday for the next update. So I see some great questions I didn't get to. I will hopefully get to them next time. And CJ says, don't you know that algo is run by the CIA? Not going to make it, Cheds. There you go. I mean, it could be. If that's the case, all I got to do is play the chart. Like an algo, if we can recapture 32, 33 cents, you take a long. If it drops again back to like 21, 22, take a look at it. It's got decent structure. But I'm not going to mess around in the middle. I don't need to know what it does. I don't need to know what's in the Discord rooms. Like just less time in chat rooms, folks, right? More charts, less chats. Okay, let the market sort out all that speculation for you. All right, I'll be back again Tuesday, and I hope you have a great weekend. I hope you have a great night. Ian says, I bought one of your books on Amazon. Thank you, brother. Appreciate you. Why haven't you bought the other 2 books, right? No, I'm just kidding. So check out everything I've got, mostly free, and I hope everybody has an awesome day. I'm going to go do some projects, a.k.a. work on some video games. I'm playing AoE 4 and No Man's Sky right now, which is a super fun game. So thank you, folks. I really do appreciate you, and I will talk to you soon. Big Cheds out.